Welcome to the Home Path Podcast. This is Raphael, and today I'm going to talk about wholesale mortgage versus retail mortgages. And I know if you are a person, a consumer looking to buy your first home, trying to figure out where do you go, the first logical choice is, let's say you bank at your local branch, and you think, well, they have money, so they must lend it out. And a lot of things that you have to understand is that when somebody lends money, they have their own guidelines, meaning they have their terms and conditions of what they look for in order to be comfortable enough to lend that money. So, for example, maybe you have a neighbor comes over and says, "Hey, can I borrow $20?" But you know that neighbor is currently unemployed, sits on the couch, and doesn't do anything with their life. Will they pay you back those $20? Maybe, maybe not. How are you going to feel comfortable versus, your other neighbor who's employed and just couldn't make it to the, ATM, and maybe the ice cream truck comes by and says, "Hey, can I borrow $20? I'll give it to you tomorrow." You may give it to him because you say, you know what, he's pretty reliable. So the same thing happens with the bank when they look at your credit report. It's just a snapshot of saying, how well do you pay your obligations? But one of the misconceptions that I get all the time is that just because you have like an 800 credit score is that you're going to get approved for a home loan, or how much you'll get approved. It just shows your ability to repay, but you still need to make the money every single month to be able to repay that loan back. So sometimes they'll say, "Hey, I don't make that, much money, and I have a sibling or somebody that's going to help me co-sign, and we're going to live in this house together." And, they have an 800 FICO, but they only make $200 a month. Not going to work. So a lot of times it's not just about the credit score. It's also how much can you make. You can also make a lot of money and have a really bad credit score. So you kind of have to balance those things out, is that you can be able to live in the home. You can show that you've paid your other obligations in the past, and that you can financially show that you can buy. And typically, most banks, lenders, whatever you want to call them, they don't want you to contribute more than 50% of your income towards a mortgage, because then, you're at risk of default, because you still have gas, food, electricity, cell phone. You have all these other expenses. And if you're paying about 50% of your income towards your mortgage, you're already at your limit. So, if you make $10,000 a month, without any other obligations, give or take, your mortgage payment, including your principal, interest, taxes, insurance, HOA, or whatever, you can't exceed 50% of that. So think about that when you're trying to pre-qualify in your own head, is that based on however much you make. But now if you make $10,000 and then your car payment's $750 and your minimum payment on your credit cards is like $500, like, you don't make $10,000 anymore. So you have to consider that, those are the things that they look for when pre-qualifying you. So the biggest difference that I would say from like a wholesale mortgage broker, or just wholesale lenders, and your retail, is that retail, just consider that you're paying retail for it, kind of like going to Costco to buy some Levi jeans versus going to a Levi store. You go to Levi store, you got to pay for all the employees, the sign outside, the lease. A lot of these leases on the malls are really expensive. So a lot of times when you go to Costco, Costco is one of the best ways to look at it. They have all these different kinds of products, right? It's not just Costco Kirkland products. They have different options for you, but they also have different prices, right? And then you'll have different experiences. So a lot of times every lender just has different guidelines, different turn times. Some move faster, some are, have more the capacity to move your loan a little bit faster, to move it a little bit slower. So a lot of times working with a particular bank or lender, maybe they have better guidelines, but they take a little bit longer. And that's okay. Sometimes we have to be flexible and saying, look, you're not in the best situation, but they will do the loan. They just don't have the capacity to get it done in, 2 weeks. It's going to take 30 days. So a lot of times we have to look at the biggest difference from retail to wholesale is how much you pay. And I think there was a study done not so long ago of the average savings of a consumer who purchases from a retail bank versus a wholesale, I think it was like $10,000 or something like that. You can probably research it. It's out there. If not, I'll attach it to the show notes. And I think this was just done in 2024. So it's pretty recent of an actual dollar figure of how much on average you save on the loan. So I think it's a pretty big amount. That what you can save going wholesale versus retail. Not that there's anything wrong with retail at all. You can that's why they're there. You can have that option. But sometimes, if you have any blemishes, they don't want to work with you because they want what's called A plus paper. Paper meaning your tax returns, your pay stubs, everything needs to be super clear, transparent, and at the highest quality that they desire in order to get you pre-qualified. So if that's something that you have, then great. By all means, there's a lot of people that get pre-approved and get those loans funded under those circumstances. But I know a lot of people who have tried to get a home and don't have the best experience because they just didn't want to work with them. So, and that's okay. That's why, we exist. The whole broker community, wholesale community, is because there's options out there. There's different lenders, different guidelines, different ways to get you into a home. Is just making sure that we structure things correctly to make sure that we show that you have what's called the ability to repay. And once we show that with some compensating factors, it's always good to position yourself that way. But I wouldn't say shop around so much because every lender is going to want to pull your credit report because at the end of the day, they're going to want to figure out what's your actual credit score and what do the numbers look like. So on average, most credit reports are good for 90 days. So know that, feel free to shop around, but every 90 days they're going to have to pull your credit report again because things change over time. Maybe you made a late payment, maybe you paid down your credit cards and boosted your credit score. Maybe you got a new car loans, who knows? There's a lot of things that changes over time. And that's why they have to look at your most recent pay stubs to make sure you're still employed, to make sure you're still making the same amount of income. A lot of times we may have a conversation and then maybe you're in construction and the rain season comes in and you just haven't been working the same amount of hours. Well, guess what? Your average income just went down. So that does impact you. So there's always something that changes. And the best thing that you can do is be truthful, be honest with whoever you're working with, because you wouldn't want a surprise like that happen where, you say, I'd found a home and I'm going to get into escrow. And they'll say, great, send me all your updated documents, only to find out that you haven't been working that much. Maybe you spent a lot of your money on an emergency or gave it to somebody. There's always things that change. So if you're not transparent of anything that you've changed financially, it always changes the situation because you're saying, hey, I thought you had the money for the down payment and closing costs. And you said, well, I had a situation come up. And you may be in the middle of escrow. And that little situation may make or break your purchase. So a lot of times, be truthful. Just always consult with whoever you're working with. I always remember a client who called me and said, hey, we were in a really bad accident. We're okay. The car's totaled, it's paid off, but we want to go buy a new car. And they're in the middle of escrow and, thank God everything was fine. They were fine. The kids were fine. And they were in the middle of buying or had to buy a new car. So we had to strategically, figure out a way for them to accomplish this where they still had a vehicle, even though in the middle of escrow, because that, if they purchase another vehicle while the other one still hasn't been paid off, it was determined that was what the intention. But, insurance companies, they take forever to pay things off. So we were just in a pickle. So we had to figure out how to get this squared away without impacting, showing a new obligation on their credit report, a new inquiry, which is going to cause a whole lot of the questions that we have to do, what's called the letter of explanation to the underwriter. So a lot of times just be truthful, be honest, and be transparent with whoever you're working with, because they can always guide you to say, okay, let me take a step back and quarterback this thing and see how we can fix this before it becomes a problem. So it's always, really good to whoever you're working with as a lender is to just explain to them what's going on so they can better advise you on how to navigate through some of those tough situations. So I hope that helped you get clear about retail versus wholesale. And wholesale is kind of like Costco, different options. And then retail, it's a very cookie cutter, traditional way to do it. There's nothing wrong with it. But if you're looking for a total different experience, the broker community is there for you. Hope you're having a fantastic day, and I will see you on the next episode.